Hello everyone. Today I'm going to be going over a basic support and resistance breakout strategy. If you're a beginner, this will be very helpful to you. I'm just going to give a simple, brief rundown of what this is and how this concept works. Okay, so right now we're on an Aussie Yen pair. I'm going to go down to the hour chart. You can do breakout trading on any time frame. I'd like to do the hour chart, but you can do smaller ones. You can even scalp with this method. So here's basically what it is. Now this is very important. We're going to go over support and resistance. Now if you don't know what this is, you're new to trading, this is very important. So I'm just going to draw it out here. We're just going to pretend this is the market. It's going to move in waves. Alright, so let's do that. It's going up, down, down. And now what we're going to do is we're just going to draw our support and resistance lines. Yeah, my mouse is messing up. I gotta get a new one. Alright. So anyway, we're just going to draw that. And this is TradingView, by the way. It's free to sign up. You can pay for other stuff, but what I'm doing here is all free because I personally don't pay for it because I don't use many indicators or anything like that. I just like to do quick analysis on here. Then I enter them in through MetaTrader 4. So this is kind of just like where I draw, mark my trend lines, all that stuff. Okay, so up here we're going to put an R for resistance because up here is a resistance. Now below here we're going to put an S for support. Okay, so we got our support line, which is the bottom, and we got a resistance line, which is the top. So think of the resistance line as a ceiling and think of the support level as a floor. So you have the floor, you have the ceiling, and the market is bouncing around in here. So you see right here a support level. This is an area where buying pressure is just enough to overcome selling pressure. And a resistance zone is where selling pressure is just enough to overcome buying pressure. As you can see, it keeps... But eventually what's going to happen is, well, at least we hope will happen, depending on what we're trading, we expect the market to either break the ceiling or break the floor. So you have the market bouncing around, and eventually it's going to break. Now, it could break, go up here, and then shoot off, and then the market could shoot off. Or, let me change the color real quick. You could just have the market come down here and shoot down here. Now, we can look for some examples on this chart right here. Let me clean that up a little bit. Now let's just get out these trendline tools. And we're going to just, right here we have an example. There's a support line. Here's a resistance line. Right here, as you can see, it almost looked like it wanted to come out right up here, but we're going to talk about that in a second. Okay, so right down here, let me just get rid of the watermark for you. Just so we can see it better. Okay, there we go. Now you can see right here we had our support line. It almost looked like it was going to break up out here. But as you can see, it broke down here and it went down. Now this was a short. Now this could have been like a quick scalp trade. I'll teach you ways how to go about this in a second. But what you want to do to really make sure is you want to wait for a candle to completely close outside of the resistance zone. So right around here you could have entered in. Or you can wait for a retest, which is what I prefer you do. But you could have entered in right around here. And what you would do is, and now here's the secret to being successful at trading. So you could enter somewhere around here, and see the red is, at the end of the red, that's where your stop loss should be. So that means you get stopped out of the market. But right here, you always want your profit to be greater than your loss. So you could use like a 1 to 2 risk to reward, 1 to 3. So you want to risk a little bit to make a lot. So you're going to risk $5 to make $10, or $10 to make $20. $100 to make $200, so on. That's a 1 to 2. So if you lose, you'd lose $100. If you win, you get $200 profit. That's kind of how you want to look at it. But with breakout trading, you can keep, a very small, because you can tell right away if something's going to be wrong, if you're going to get stopped out. So if this didn't work out, you would lose a little bit, and you'd say, okay, but if you win, you would win more than you lose. So the more trades you take, you don't have to be right even the majority of the time, because your winning trades are bigger than your losers. So your wins can overcome your losses. What matters is that you're profitable. That's all that matters. So as you could see, if you entered in right about here, you could say that's about 36 pips. And if you put a full standard lot size in, that would be $360. And you would have made that in about, this is the hour chart, so you would have made that in about 2 hours. That's pretty good. Obviously, if you don't have a big account, you want to stick to a smaller lot size, like a 10-cent lot size, something around that. And now here's another thing, because there is fake outs, and we're going to talk about those. So right here you can see there's a bit of a fake out. Looked like it was going to go up. Obviously, you should wait for a candle to completely close on the outside, but then again, that doesn't always work. None of the strategies are foolproof. That's why you got to use a good risk to reward. So here's another concept that I'm going to teach you about. Now this is called retesting. Now I'm going to draw an example of this. So a retest is when price reverses direction after a break and it returns to the breakout level, and then you test that to see if it will hold. So what I'm talking about is this. I think this was the same color. Just ignore the color difference. Okay, so right up there, it looks like it's breaking out, and then it comes back down. And then it shoots off again. That is what's known as a retest. Now, I'm going to show you an example on the pound-yen chart. I already marked this up. Alright, so we got our resistance level marked, we got our support level marked. It broke through, candle closed on the outside, came back up, retested, and then shot all the way down. Another thing that you can do is, I've been using this recently, is to help ensure that your breakouts are going to actually be breakouts. Look for big candles. It's like here, you got really big candles. Right here, big candle down. Here you got some big candles. You want to look for big candles. You want lots of momentum. Another thing you can do is look at is for volume. So high volume, like right here, yeah, this shows that it's going to really drop because you have the high volume. I mean, this is a good setup. You still want to use your risk to reward, and you still want to be cautious about what you're doing. Obviously, you want to practice this. I recommend practicing on a demo account. And you can also use tools like I've been using this recently. It's called the VWAP. As you can see right here, it broke below the VWAP, and you can see it trailed all the way down. You can see these three little lines. I'm still new to the VWAP. This is the volume-weighted average price movement indicator. And I'm still new to this, but I will say so far, because I don't really use indicators that often, I just use the volume chart if I'm breakout trading, usually. That's what I've always done. I sometimes use the RSI. So back to, I think I want to go back to Aussie yen. So I'm going to show you another thing that you can do to help ensure that your trades can continue to stay in the profit and use as little risk as possible. Now here's a good example. So you could do something like, let's just get out here. Let's see, what did I want to get? Horizontal. Oh, we'll just use the horizontal line, and we'll make this red. Now let's just pretend that this is your stop loss. Okay, maybe you start off up here, you see, oh, it broke out here, candle forming, it's a decent sized candle. Okay, so let's just trail it slowly as the market moves. You just start trailing this. Start trailing, start trailing. Eventually the market reverses in your direction. You get out somewhere around here, and you just avoided all of this if you were selling. You just avoided this huge uptrend here. Now this can help you, but it can. One of the cons is sometimes the market will shoot back up and then go shoot down even lower. But it's all a probability game. We want to do what's least risky as possible. Obviously, if you want to, you can obviously take your chances, and you can go for longer trades. But just know that the longer you hold the trade, the riskier. But you do want to hold your trade enough so that it outweighs your stop loss. Well, that's pretty much all I have for today. Thank you for watching. I hope this helps you out. And thanks for watching. All right.